You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to Watching the Financial Survival Network. I'm Kerry Lutz. Election day is over. Now we get on to other frauds. And with us now is our good friend, Joe Robert. Joe, by the way, you find him at robertventures.com. So, Joe, hey, watching the whole crypto space meltdown, with what's going on here, FTX, and it looks like it was a Ukrainian money laundering scheme, perhaps connected to a major political party in the U.S. for raising funds for campaigns. I mean, who would have ever thought you'd be using crypto to launder money? I mean, I'm just in shock.
Yeah, I mean, currently there's definitely a lot of theories running around Twitter, and I'm sure over the next few months we'll get to the bottom of it. So obviously we don't know all the inside information, but there's definitely relationships with Sam, his family, and political ties here in the U.S. And then also along with a lot of the donations he was making to certain parties, kind of ties it together. And I think it'll kind of unravel as this case comes to light over the next year.
Okay, so look. People have been telling me for years, I don't understand cryptos. I don't understand how they work, what they are, all of these things. And what I do understand, and we were talking about earlier, is I do understand human nature. I do understand that human nature never changes. You can have all the technology in the world, but a certain amount of the population is going to want to do it the easy way at the expense of others. And preferably without getting caught and having to pay the price. Cryptos are no different in that regard, are they?
Yeah, I think whenever you have money that can be easily made, a lot more people show up on the scene, and that causes a lot more problems. And especially in industries that are newer, this typically happens because a lot of people fleeing, the regulations aren't put in place, and people take advantage of the situation. And so I think that's what we've seen here. I think, it's a very good possibility that when he initially started out, all intentions were good. And along the way, with different blowups in the market, like the Luna collapse earlier in the year, that maybe what happened is they started to have some problems and they tried to cover it, but the hole just kept getting bigger and bigger. And then sometimes what people do is they keep digging themselves into a bigger hole, hoping they could get out of it, and eventually it crashes, right?
Yeah. Hey, I've seen this. I can't even tell you how many times I've seen it with lawyers, because lawyers, they have these things called escrow accounts, trust funds. And you get a little short on money, and then the lawyer says, well, I'm just going to borrow $1,000 and I'll pay it back next week. And he might even pay it back next week. And then it's like, well, I paid it back last time, I'll just borrow it. And eventually the problems cascade, they multiply, and I meant to pay it back, but I just don't have the money. What am I going to do? And then eventually they get caught because the check comes due. And this seems to me exactly what has happened with FTX.
Yeah, and it's unfortunate because sometimes we'll see in the market is the loudest players that everyone tends to build trust with end up being the people that get in trouble, right? So Luna and Do Kwon, very loud across Twitter. A lot of people are investing there. Celsius with Alex Mashinsky this year. He's very loud across all YouTube channels. And now we have Sam, and how they built a profile around him online with his Toyota Corolla and everything. Build trust in the people. And unfortunately, these type of players, are probably the ones that you should stay away with, those that are making the most noise online.
It's endemic to markets.
Yeah.
A lot of people trusted Bernie Madoff, and he had much better creds from a traditional standpoint than any of these crypto fraudsters. They believe this guy. I mean, he was head of the NASDAQ, for crying out loud. He'd never steal from us. It's not even a factor. And yet, a lot of people knew exactly what he was doing. Who do you think knew about Sam at all? You think people knew about what was happening?
I think probably it unraveled pretty fast this year since we had the initial blowups of Luna and other players in the springtime. And there was probably only a select certain amount of handful, 5 or 10 people in his inner circle that were probably familiar with the hole that's been building over the last few months, why they kind of shuttered a lot of other people out. So it wouldn't, get out and investors wouldn't be aware of it. And I think it just caught up to him. If it didn't catch up to him now with everyone withdrawing their funds to put it in cold storage, it was going to probably catch up in the next few months or at some point here in the future.
Yeah. Well, at least when you deal with Wall Street, though, there is some insurance available, although if there's a mass market disruption, that probably wouldn't do you any good. But you got SIPC, you got FDIC, you've got, FHA, you've got all these loan guarantees all over the place, which I'm not a proponent of, and government insurance schemes. I'm certainly not a proponent of them, but they do add a certain amount of stability to the market for a time and maybe facilitate complacency. So what's the lesson here, I guess, is what I'm asking. What do you, Joe Robert, as a sophisticated investor, what do you take from this whole thing?
Well, a few things I've learned this year is one, crypto there's a saying called not your keys, not your coins, right? So the whole ethos around the movement is taking custody of your own assets to where no government regulation or any central authorities can put your assets at risk. So if you're a proponent of that, you should be self-custodying your own assets on your own ledger under your own control. That's one thing you should be doing. 2 is in any market, if the yield seems unreasonable or too high, it typically always is, right? And is not sustainable over a long period of time. And so what happened this year from a lot of players that are having problems was because everyone was chasing yields the last couple of years to earn on their Bitcoin, Ethereum, USDC, et cetera, when really internally everyone was, shifting assets around and trying to generate this yield to pay customers. But now the music stopped, it crashes. So, in crypto, just to chase a 3 or 4% yield is something I wouldn't do. There's enough returns in the asset class that you don't need to take on that additional counterparty risk. That's the 2 big things from these 2 blowups from this year that we could learn. And, the whole point of also blockchain is building this open source software that at the end of the day, the software executes the trades in a trustless manner, and then you can self-custody your assets. So we don't have these problems with these central players in the future.
Yeah, as long as nobody hacks your computer, then self-custody is okay. So we're building digital fortresses in the sky, and I don't know if they're going to work or not. But in normal life, possession, they say, is 9/10 of the law. I'd say with crypto, possession is 100% of the law.
That's good. I agree there.
Yeah. So further blow up. So what do you do now? Like, tell us what are some, with everything going down, with the air being let out of the most gigantic economic bubble in the history of finance, where do you find safety? Where do you find returns? They always say, Joe, like in a bad economy, you're not so much concerned about return on investment. You're more concerned about return of investment, right?
Don't just survive, thrive. The Financial Survival Network.
Goldterra Resource Corp is a gold exploration company that has assembled a highly prospective district-scale land position on the doorstep of the city of Yellowknife in Canada's Northwest Territories. Goldterra is currently focused on expanding and delineating gold resources at the company's Yellowknife City Gold Project, with a goal of discovering over 5 million ounces. With ready access to infrastructure and multiple high-grade gold discoveries, Goldterra is on track to re-establishing Yellowknife as one of the premier gold mining districts in Canada. Goldterra trades as YGT in Toronto and YGTFF on the OTC. For more information, go to goldterracorp.com. That's goldterracorp.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Well, I totally agree. I think for the first time in the last couple of years, most of the people can say, or at least agree upon, that cash is a king now. Yeah. And getting that 4.5% on T-bills is acceptable in the short term, as you may be looking to see what opportunities arise here. I think a lot of the asset classes are still trying to find that floor for a price, right? In the private markets, we're still seeing some of the valuations come down on companies. Crypto, we're slowly probably finding a floor, at least in our in what we think. And so if you're a 3 to 5 or 10 year time horizon investor, it's probably a good time over the next 18 months to chip away at what size position you want to own and dollar cost average into that position.
Okay. Hey, so when do you think it's time to get back into cryptos, or should you never leave them?
I think we currently right now are in Bitcoin and Ethereum. It's kind of where we're staying at least probably for about 12 months. So we're staying with the blue chip tokens for right now, and we will look to maybe allocate into other projects in about a year.
All right. Well, I think there's quite a bit of logic and reason to your approach there. Now is not the time to be juggling altcoins, but hey, they're so depressed now, Joe, and they could go lower. But if they're like really depressed, like how much is Dogecoin worth? Is it worth going into Dogecoin if Twitter adopts it as its primary payment mechanism?
Look, within the crypto industry, there's thousands of tokens. So it brings you the opportunity to speculate as much as you would like. Mm-hmm. So if you think Doge might have a better opportunity with Elon Musk and Twitter, that might be a great position to take. Our thing is, we didn't really see a long consolidation period yet on the altcoins, like we've seen in other cycles. And so we think, like I said, probably another year out is when we'll start taking, bites at the altcoins based on some charts.
Yeah. Well, these charts, looking at the various charts for the various cryptos, are hellacious. If they were stocks, you would be running for the exits. But because I don't understand crypto and you guys out there do, you're content to ride the roller coaster down to the sewer.
That's why I'm saying is I think, if you want to take the more conservative approach, is I wouldn't go, gambling and speculating on these altcoins at this time. I just don't think in the current global economy that's where your use of capital should be put. And that's why I say about a year out. I mean, that could change as we move along, but it's better until crypto finds a floor and you even see some increase and momentum in the market before you take your positions. Yes, you might have a less of a return, but your probability is a lot greater.
Okay. So, but if you were just say, I want to pick out 3 cryptos, put a little bit into them and kind of set them and forget them, what would those cryptos be besides Bitcoin and Ethereum?
Besides Bitcoin and Ethereum, Polygon, Matic, / Matic, it's they're definitely garnering a lot of partnerships with some of the Web 2 companies. I would say, even based on recent events last week, Solana, it still has a lot of users and the prices come down quite a bit. It's coming to a more reasonable market cap. Right. That'd be the second one. Third, probably the Cosmos Atom token. That'd probably be the third.
All right. Okay. Well, hey, interesting. I mean, hey, I'm a believer in crypto, especially in the long run, because there will be governmental adoption. Whether there is a cryptocurrency market, they're not really currencies, but let's just call it a crypto asset market. It will exist, but I don't believe it's going to be in the form that it is now. You're never going to take cryptos and go buy groceries at the supermarket. It's just not going to happen that way, because I believe, Joe, we're going to have central bank digital currencies. And, this bumper sticker that I saw a while ago on a car, it said, "Don't steal. The government hates competition."
Interesting. I mean, we'll sure see what plays out over the next 10 years. I don't think there'll be, probably a need for 20,000 different tokens. That's for sure. But one thing we like to say is that we're definitely moving towards a more digital economy as a whole, and therefore digital assets in general, which is pretty broad, is going to be very large in the future, and it's going to be part of everyone's portfolio.
Yeah. Yeah. And I do believe that in terms of how you hold title to assets, that's where it's going to be big. Hey, maybe they'll even rationalize our voting system. I mean, something's got to be done, and I'm not here to get on a soapbox about it. But anytime where data integrity is necessary, then the blockchain's going to have to be involved.
Yeah, you don't. I mean, we could sit here and make up stories all day long, and sometimes, some certain people might not want that certain transparency to show up, and that's why there's a lot of pushback for many years until finally, it's implemented, and that's maybe what is occurring. But obviously, the technology is out there where they could implement better systems for everybody.
Yeah, and that goes with anything. In the stock market, there's a number of, even with all the major technology, tens of billions of dollars have been invested, and yet you still have busted trades that nobody can figure out who owns it or what. Certain measure of trades are busted, and that's where the blockchain really, really can play a huge role. Hey, well, we appreciate you coming on, Joe. Just tell us, where do we find you? How do we connect with you on the web, and why should we?
Awesome. So yeah, for those that are interested in digital assets, you could join our weekly newsletter at joerobert.com. Subscribe there. That goes out on a weekly basis. Also, anybody who is looking to make an investment with us, you can book a call with me directly at robertventures.com. One reason you'd like to do business with us is been investing for 20 years. We have experience, and we have returned capital to all of our previous investors and partners, and haven't ever ran anything similar or close, and we never will, like FTX.
All right. Well, that's reassuring. But there's only one way to find out. Do business with Joe, $10 million with him. And if you have 11 at the end of the year, then he was probably on the level.
That's right. That's right. All right. Thank you, Kerry.
Hey, thank you for coming on. Hey, got a question for Joe? Shoot me an email, kl@kerrylutz.com. When you're at the website, financialsurvivalnetwork.com, don't forget, sign up for your free newsletter. Joe, we'll talk to you again real soon. Thanks so much for coming on.
See you later. Thank you.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.